Well, now, listen, there is nothing like 100% risk-free investment. So therefore, there is no investment, not only in Africa or Kenya, globally, anywhere, there is no investment that is 100% risk-free. So those guys who are inboxing me are telling me, hey Joseph, I have 100,000. I want to show me where I can invest, where I'm 100% sure I'm safe, my money is safe, no risk, no nothing. You know, I'm scared the moment you approach me with that mentality because you're broken mentally. But in terms of, with respect to entrepreneurship, you are wrong. There is nothing that is 100% risk free. Let me tell you one secret. Even your life, who can promise me that tomorrow morning, depending on when you're watching this video, tomorrow morning that you're going to be alive? Who can promise me that? How sure are you? The life itself, it is not even predictable. What we do, we try as much as we can to minimize the unpredictability. Let me tell you one secret. Let's say you have 100,000 somewhere you want to invest. Let's say you have this 100,000 somewhere you want to invest. So you're this kind of a guy who, okay, there are two options here. You can either invest, are we together? Or not invest. Are we together? Okay? Those are the only two options you have. Oh, you know what? I'm so scared. I don't want to lose my money. I don't want to do this. I just want to play safe. So you don't invest. Or you can be like, okay, I know it's not 100%, but I want to get into something that at least has, you get what I'm saying? I'm gonna get into that particular point. Now, we know very well, if you go the investment way, there are only two outcomes. There are two outcomes. A, once you invest, guess what happens now? It's either, indeed, you lose that money, are we together? Or two, you make crazy out of it. You make crazy money out of it. Are we together? So there are only two options once you invest. You either go ahead and lose that money, if you maybe didn't consider some of the factors correctly, you go and lose that money. Or option two, you actually win and make good money out of that, what you've invested. You win, in short. Are we together? But when you don't invest, the only one outcome. The only one outcome. Why? You won't make nothing. You will make nothing. You won't make anything. You won't make anything. You won't make anything. Are you together? There are only two options. When you invest, you either lose that money or you make that money, or you invest or you win, or you go ahead and achieve that goal and dream that you wanted. Two, if you don't invest, you are 100% sure you ain't gonna make any money, you ain't gonna do nothing. There is only one outcome. So that means, I was about to say kwa hivyo, then I realized not all of you guys understand Swahili. That means investing is the better option than not investing. And as much as we invest, be assured that it's nothing like 100% assurance as far as the investments are concerned. In this world that we are in, we try as much as we can to make sure that, how can you even promise me that kid that you're having gonna be the most successful kid? Maybe gonna end up be the most stubborn kid, and God forbid. You get what I'm saying? We are not 100% sure. What we try is as much as we can. In the language, or in the world of investment, there is a language, there is a term that we use to describe investments. There is something that is I always talk about here. Probably usually think like maybe it's out of nothing. There is something called capital preservation. Capital preservation. All right, capital preservation. What you consider when you're investing, you always ask yourself, is my capital preserved? And the higher the capital is preserved, the better it is, or the less riskier it is to invest into that particular thing. For example, just like I said, we don't have 100% risk-free. Maybe we can say, depending with the percentage, whenever your capital preservation falls under 90 to say 97%, capital preservation falls under this category. Like 90% of your cash to 90% of your cash is actually sort of capital assured. Then we say this investment is actually a low risk investment. Low risk investment. And again, this assurance or this percentage can differ from one country to the other. Depends. And as well, it can differ from the investment to the other. There's some people, whenever you are actually having 60% of your capital and above, assured, this one is already what? A low risk. There are some places where you do this, you're actually operating under low risk. Depends with the terms and conditions of that particular investment or the laws that guide that particular land or the country that you come from. Now, that is low risk investment. Then we usually have what we call the moderate risk. Moderate risk. Moderate risk is where we say at least half of your money is assured. The other half, we cannot talk about anything about it. So it's 50-50. You get what I'm saying? Say 50 all the way, say to 70%. This is where we speak the language of moderate risk investment. 50% of my cash, for example, if you invest in something like a balanced fund is whereby you get a fraction of your cash is invested into equities or securities. Not really securities per se. Equities is the shares or the stocks. And you all know that shares and stocks are not or do not fall under what we call the low risk investments. They are a little bit of a moderate to high risk investments. So when they invest, your cash or certain fraction of your cash, let's say 50% of it goes to the equities. And the other 50% goes to things like securities, like the bond, goes to things like, bills and, those kind of things, the securities. So therefore, it means that at least 50% of your cash is assured that it's going to be there compared to that 50% of other money that it is going to a little bit of a risky investment. Are we together? So I've used the example of a moderate risk. And then we have high risk. High risk, this is where we say 50% or less of your cash, guess what happens? It is not capital preserved. For example, let's say you start a business. Let's say we wanted to start a fresh vegetable business, or maybe let's say fruits. We all know those are perishables. And let's even we say we are starting with as little as even 20,000, okay, as the stock. Now, this 20,000, probably in 2 or 3 or 4 days, the fruits are going bad because they are perishable and what have you. That amount of money that you use to buy that particular thing, it is not assured in any way. Even less than 50% of that amount of money. Probably you're going to sell maybe say 50%, the rest 50, say you are starting a business, goes south. And of course, whatever I'm saying here does not always hold the truth. Maybe you can sell 70% of it, 80% or 90%, or you can even sell all of it and you have not even realized any loss out of it. So the point is, the moment you get into an engagement, what you've purchased cannot be resold. It cannot be. You cannot resell it, instantly. You cannot liquidate. For example, if you buy land, that is capital preservation. Why? We all know the history of land do not go down, they appreciate. So the capital preservation, yes, it may take time to liquidate that a particular parcel of land, but the reality is the capital preservation is there. For example, when you buy a car, it's in a way we can view, a car is a liability for sure, but the moment they're actually calculating your net worth, even the cars they include as your asset on that matter. Therefore, but when we take a car in isolation, car is a liability. The moment you buy, it actually depreciates. The capital, for example, if you buy a car worth say 10 million today, maybe after a year, maybe the car depreciates at a rate of 10% per year. So $1 million is gone. So you're gonna sell it at 9. You're gonna sell it at 8. The longer you stay with it, the lesser in terms of attracting good amount of money becomes. So the point is, the capital preservation usually matters a lot. So the moment you have less than 50% of your money, put it into an investment, is not capital assured, then we say that is kind of what we call a high risk engagement and that kind of thing. So what exactly procedure do you use so that at least, yes, of course, as much as we do not have anything that is 100% assured, but at least we can invest our money and also, of course, move to the next level. There is something I taught you sometimes back here. It is called affordable loss. Okay, I don't know whether you can remember that term. There is a term I use sometimes back here. I call it affordable loss. What is your affordable loss? Meaning, what is that amount of money can you put it on the lifeline? And if you lose it, you're good at it, you don't have any problem, you won't feel, of course you feel bad, obviously, because even if you had $1 billion and then you lose 2,000, I don't think there is any money that is worth losing. Are we together? But at least it's worth losing when trying. You know why I'm saying that? It depends. What were you aiming for? What were you doing? Were you trying to win? Yes, I was trying to win. Then it makes sense. okay, rather than just throwing that money overboard, okay? So the point is affordable loss. It's always good to calculate, to identify how much is your affordable loss. How much can you accommodate in yourself and be like, you know what, this is my affordable loss at this particular point. For example, myself, I always know that my affordable loss is at 27%. That is my affordable loss. So what is your affordable loss? What do I mean when I say 20? If you give me 100,000, if you give me 100K, it's the only money I have. It's the only money I have. I can risk 27,000. I can risk 27,000. That's me. So what is your affordable loss? If take this example, if you had 100,000 with you, no other money, how much would you put into the lifeline? How much would you put it to risk? And of course, when I say I can risk this amount of money, it's with respect of I am aiming to get something. So it is good to understand that is particularly is your affordable loss. Are we together? So that at least my your affordable loss is somebody else will tell you. Like I had a client who told me, like, my affordable loss, Joseph, is 2%. So they're only comfortable putting the lifeline only 2,000 out of this. And of course, the lesser the affordable loss, of course, the lesser the win it will be. The bigger the affordable loss, are we together? The higher amount of money you can win. Absolutely. Are we together? Because assuming me and her get my money into, say, in any investment, okay? Of course, the returns of 27,000 will be higher than 2,000. I mean, that's obvious. Are we together? So the higher you can risk, of course, I mean, take examples of people like Elon Musk. I remember there was a time he was saying he only, I don't know, he had only $50 million. Well, I know that's quite a huge amount of money. I don't know, he invested all of it into the thing. He was facing some, I don't know, marriage issues and what have you. And probably from an average individual, the guy could have just decided with my 50 million somewhere dollars, that's like close to 7 billion Kenyan shilling, can just decide and buy myself a house somewhere, relax, and the rest of my life I'm good. But he said, you know what? I don't care. I'm just gonna plow all of it into the investment, and then one day I'm gonna go ahead and make more. And of course, we all agree where he is right now. Obviously, he doesn't have a 50 million somewhere. He's arguably the richest person on earth. So the point is, it's always good to understand what is your affordable loss. So whenever you're investing, please consider all these factors. Is it a high risk? Is it a moderate risk? Is it a low risk? And by the way, how much am I willing to put it on the lifeline? What are the conditions of these investments? For how long have they been there? You know, as much as we say there is nothing like 100% assurance, it's good to minimize the probabilities of you losing that particular cash. You know, you can't just be saying, hey, Joseph say there's nothing like 100%. No, don't do that. You try to minimize as you can. That is when you're starting even a normal business. You have to find out the location, the target client. You know, you have also to work on your customer service, the presentability, the integrity issues, the cleaner or the hygienist, and all those kind of things. At least you may not get all the factors correct, at least, but if you get at least 75% and above, that's what we always say and recommend in business. If you get 75% factors aligned to your business, then go ahead and start. Find out about the 25 as you move to the next level. There is no way you can learn a business 100% of its entirety, you being outside of it. There are some of the things you can't learn about them until you get. It's like a marriage. No matter how smart you can be, there is no way you can learn everything about marriage when you're outside. No, there are some things that you only learn when you get inside. Once you get, oh my goodness, now you get you get what I'm saying. No, that is exactly how you're supposed to view these particular investments as we move to the next level. I hope I've answered that question for all those guys. Please, whenever you approach me on my inbox, don't come with a mentality of, hey, Joseph, show me I have this amount of money, I want 100% sure. And the moment I see those kind of wording in a text or a call, I usually drop the offer. I say, you know what, I may not be able to handle you, because just go first of all, fix how you reasoning in terms of the businesses and what have you, because you're putting me on, because most of these people who come with that mentality of tell me 100% sure, if they start a business and then it goes south, of course, who do you think they will blame? They'll come back to me, you told me to start the nail parlor business, now it has failed, I don't know, you get what I'm saying? I love to talk with somebody who knows, yes, I am getting into a business, I want to make money, but at the same time, I'm informed that 1, 2, 3 can happen. But in case this 1, 2, 3 happens, I have an emergency fund somewhere, I have this and that. So at least you get what I'm saying when you're informed. And when you're not informed, you'd rather even approach me and tell me, Joseph would like us to talk about business, I want to do this, or Joseph would like to invest in such kind of thing. Then I can be able to do the analysis and see who are you made up of, what can you invest, to what extent can you go, how much can you stretch, and all those kind of things. So by the time we are proposing this or that, then I already know this is an informed decision. Anyway, guys, that is it. If you'd like to get my services, never forget that my number is always on the description of this specific video. For now, so goodbye and see you the next time.